Let's welcome on board Dipan Mehta as well and find out what he's planning for 2024. Dipan, hi, afternoon. Firstly, wishing you a very happy and prosperous new year from all of us.
Yeah, hi, good afternoon, and thank you for having me on your show. And Happy New Year to you and the entire team at ET Now.
Thanks. Dipan, what's the strategy for this month? The seasonality says go easy. Would you say be a little cautious, try and protect profits?
I'll go with the latter. We need to be a little cautious and protect our profits. Generally leap years are not that great if you go back into memory, right? From 92, Harshad Mehta scam to 2000 dot-com bubble, 2008, the global financial crisis, 2020 was, of course, COVID-19. So I'm a bit superstitious about leap years. So I just want to play on the safer side and not make any aggressive moves, reduce leverage positions, improve the quality of the portfolio.
Interesting, but we have been discussing those graphs, how every 4 year there's a top that's made, and usually the top of the market happens in the first quarter of the calendar year, and we are sitting right there. But let's see in terms of the other sectors and markets as well, what else is happening. ITC, that's showing a big breakout. What do you make of that, Naresh?
ITC looks interesting because it's gone through a pretty sideways period of last almost 6 months, and today it's seen a breakout. Yesterday also was a breakout. I would expect a retest of that mark of 500, which is where it topped out on the news. So overall, at current levels, the risk reward may not be great, but it's a hold at current levels. So I expect a move towards 500 in the short term.
Coming in on ITC right now. And Dipan, ITC brings me to the rural plays, or rather, low ticket retail plays, and the kind of Q3 updates that you're seeing from there, be it for a V-Mart or for that matter from a D-Mart. And the slowdown is quite evident, and the K-shaped recovery only becomes stronger, wherein the urban, more exuberant spends are the ones which are seeing an uptick, whereas the lower end of the curve is only getting dragged lower. Do you think that's a contra call right now one could bet on, or would you say avoid?
So generally, we have not been very positive on ITC, and certainly that call has got us wrong, because ITC has done pretty well over the last few months, last 2-3 years as well. The price to earnings multiple certainly has expanded, and management is more open and transparent with communication. And then there's this demerger of ITC hotels also, which is a value unlocking opportunity, at least marginally. But end of the day, it's a tobacco company and volume growth is low single digit. They have been trying to get away from tobacco for the last 30 years or so, but have not been able to do so successfully. Tobacco still remains a large portion, cigarettes and tobacco still remains a large portion of their net profit margins and of their net profit. And whatever they've achieved in terms of FMCG, you compare that to what other FMCG companies have done in the past 10-15 years, it is quite disappointing in terms of return ratios or operating profit margins. So for us, ITC is still an avoid. Maybe we are prejudiced against it being a cigarette company per se, but there could be trading rallies and stock can certainly move up higher because P multiples are low compared to other consumer-oriented businesses.
Taken, but just coming back to Bajaj Auto, because that stock is soaring away up around 6%. Let's go across to Shrishti to get a sense as to what could be the numbers in terms of the buyback. What's the buyback math looking like, Shrishti?
Well, yes, a big announcement coming in from Bajaj Auto, wherein 8th of January is the board meeting where the company will discuss on the proposal of a buyback yet again, because just 1.5 years back, we have seen Bajaj Auto coming out with its first ever buyback, which was back in June 2022. And that buyback was of around 2,500 crores. And the company has been rewarding their shareholders through dividend, but that was back in 2022, where then for the first time ever, the company has announced the buyback, and this is the second time that the company is coming out with a buyback proposal. On 8th of January, we will have our eyes on, but the company last time has done a buyback of around 2,500 crores. Then too, they had quite a healthy cash on the books, and this time their balance sheet as well is quite very strong. But along with that, this time we are seeing that the industry is turning around. Some of their new launches are doing pretty well. So let's see, and that will be interesting to note if this buyback buyback will be of a higher amount of that 2,500 crores, which the company has done earlier. In terms of the cash on books, then the company has a surplus fund of around 17,326 crores as of 30th September, and that was after a dividend distribution of around 4,000 crores during the quarter, because company has been rewarding their shareholders. Like I mentioned, quite a healthy dividend yield, and every year it gives around 120 to 140 rupees per share onto their dividend terms. So all eyes will be on Bajaj Auto, but definitely on the back of this buyback announcement, we are seeing no stopping on the stock of Bajaj Auto. Back to you.
Yeah, clearly 4.5% higher right now. It touched that 7,000 mark as well for the first time ever. That's Bajaj Auto in trade for you. But Dipan, what are your preferred bets within the two-wheelers?
No, I think Bajaj Auto has done really well, and the monthly numbers were quite impressive. And I think gradually with the global economy settling down, exports should pick up certainly for Bajaj Auto. Valuation-wise also pretty reasonable. So from that point of view, I think one should remain invested in Bajaj Auto, but specifically from point of view of the best two-wheeler company, in our opinion, would still be Eicher Motors. And we are a bit disappointed with the monthly numbers for the two-wheeler sales. It was well below our expectations, but that could be a minor aberration. But in the medium to long term, we do feel that Eicher Motors will be able to gain ground and grow on a consistent basis, purely on account of its product profile, expansion of its distribution network. And there's a huge export opportunity, which I think is not being pursued adequately, or it's not giving results so far in terms of strategy.
I also wanted to discuss the entire power, oil and gas space with you. But before that, Dipan, let's listen into the bites coming in from both the oil minister as well as the coal secretary, because the oil minister was talking about how there's going to be no cut in the retail fuel prices, or at least for now, there's no discussion on the table. And the coal secretary also talked about how they are going to become completely independent in terms of coal right now, and the coal import dependency is something which is expected to go away. Listen in to the view coming in from the oil minister as well as the coal secretary.
We had a target of 10% blending by November 2022, 23 or 22? 22. We did that 5 months in advance. Then we had a target of 20% blending by 2030. We brought that target forward to 2025. आप पीछे आपने कई कहानियां सुनी, आपने कुछ कहानियों को एग्जैजरेट भी किया कि यहाँ से फीड सप्लाई बंद हो गई, वहाँ से वो हो गया, सारा प्रोग्राम इज गोइंग टू बिकम वल्नरेबल. लेट मी टेल यू, yes, when you do a large scale transitioning like this and you're using diverse feeds, there are challenges, but we've not only met all those challenges, we met our 12% blending target, which was October 23, and we are well on our way to achieving the 20% target by end of 2025 instead of 2023. No discussion with the oil marketing companies on any such issue. And please, we are in a highly turbulent situation.
Coal India is doing extremely well. You must have seen the market capitalization growth in last about a year plus. It has gone up by about 40%. As regards the production volume is concerned, Coal India is consistently showing excellent growth of over 11% compared to the last year. And as far as the capex is concerned, Coal India has achieved 84% of its target by December. Primarily, Coal India is investing onto the first mile connectivity projects for eco-friendly mechanized evacuation of coal from the mines to the loading point. Massive investment is going on environmental sustainability measures, which includes closure of the mines and lot of afforestation, creation of water bodies, eco parks, OB2 sand, etc. Various projects are under implementation. Coal India also have plans to construct the spur lines as and when required. CIL has committed about 20,000 crore plus of investment onto augmentation of railway infrastructure in association with the state governments and Ministry of Railway in all three major coal producing state of Chhattisgarh, Odisha and Jharkhand.
Well, a slew of stocks in focus as well, given that we are seeing a bunch of Q3 updates to trickle in. Let me take it across to Ashesha for a quick summary. Ashesha?
Well, yes, first up, let's talk about V2 Retail. The stock clocked an upper circuit of 5%, very strong operational data. 56% revenue growth is what the company has reported on a year-on-year basis. SSSG growth, meanwhile, has also come in at a solid 47%. The stock is locked in upper circuit. Remember, the stock has risen over 50% in the last 6 months odd. The stock today on the back of operational data is in focus. Bank of Maharashtra, meanwhile, is also up nearly 4%. Deposits are up 18%. Advances have seen a solid uptick of about 20%. CASA ratio, meanwhile, stood at 50% versus 52.5% that the company reported same time last year. CSB Bank, meanwhile, is under pressure today, down nearly 2.5%. Deposits are up 21%. Gross advances are up 23%. Perhaps weaker than what the street was working with, and the stock is reacting negatively in trade today. Punjab National Bank, meanwhile, is trading flat. Domestic deposits have risen by nearly 9% on a year-on-year basis, and advances are up nearly 14% on a year-on-year basis. Let's also talk about high-tech pipes. The stock is up nearly 1.5% after it reported 8% volume growth on a year-on-year basis. Share of value-added products has also risen, and they did talk about their expansion plans that they've commissioned a new plant in Gujarat. The stock is up nearly 1.5%. Lastly, let's talk about Vedanta on the back of operational data yet again, where mined metal production is up 7% on a year-on-year basis and about 8% on a sequential basis. Refined metal production, meanwhile, on a sequential basis is also up nearly 7%.
Point taken. In fact, we spoke with the management of High-Tech Pipes and they wanted to target a revenue profile of 5,000 crore with an EBITDA of almost 250-450 crores. So that's one stock to really watch out for. But Dipan, within the entire updates that we have got right from the financial names like Fed Bank, M&M Financials, and the slew of updates that my colleague talked about, what really stood out to you?
No, I didn't get the question. What are the updates that we are talking about?
The Q3 provisional updates that have come in from a lot of companies, right from Avenue to V2 Retail to V-Mart, and also the banking numbers that have come in from Bank of Maharashtra. You had M&M Financials come out with their provisional number. Ditto can be said for Federal Bank as well.
No, see, I've not looked at those numbers that closely. Nothing which is really eye-popping in terms of us to change our view on any of these companies, and rather wait for the quarterly numbers. The earnings season is around the corner. But by and large, from whatever I have seen, the banking companies are done pretty okay. But rest of all the indicators, momentum indicators, are not all that great. And if you really ask me, the biggest risk factor for this bull market is a slight pause in the earnings growth. And that can happen at any point of time because of base effect or mild recessionary or slightly depressed demand in certain parts of the country. And I think the early indicators will certainly show that. For example, the volume figures which came from Maruti were not all that great. Even the GST number was okay. I think 10% growth is amongst the lower side. So we just need to keep an eye out for such high momentum indicators. If they're turning slightly soft, and that certainly is a risk factor.
Point. Okay, that's pretty much an update of the Q3 updates that have come in and what has been ahead of estimates, what's been in line and what's been a weak set. Clearly, V-Mart and D-Mart both have been weaker than what the market was anticipating. But let me take it across to Sharad as well and get in a sense of what the dealing room chatter is this afternoon and what are the stocks which are being talked about. Sharad?
Well, the khabar on the D Street is focus is Aarti Industries, and sources to ET Now say that Aarti Industries is in talks with UPL for a new long-term contract which is coming in for the intermediates. Now this should be coming in for the agrochemicals phase. Now already the company is having an existing business contract with UPL, and this should be a newer and a bigger one. Now it's expected that the new contract will be likely a multi-year large contract also, and recently also a large contract was announced with a global agrochemical player as well. Also no replies come in from the queries sent to UPL, but Aarti Industries stated in an email replied to the ET Now that UPL has been a customer for several years and the company regularly engages in supply of various products coming over these years. So Aarti Industries would be in focus as it is in talks with UPL for a large long-term new contract.
Interesting there. Thanks, Arshad, for joining us with that. But Dipan, this entire space, agrochemicals, specialty chemicals, it seems to be coming back. And we were just speaking with an analyst earlier in the day who believes that we are very close to the bottom of the cycle. So if one is looking at a medium-term play, is chemicals a good bet?
Yeah, see, these are cyclical industries, and certainly they can come back in the reckoning if prices were to move up, demand improves. But valuation-wise, I think they are quite richly valued, given that essentially they are B2B businesses, as also the fact that they've had last 3-4 quarters to be extremely soft. Also, large capacities are going on stream for virtually every specialty chemical manufacturer, and how that actually the capacity utilization and the returns over there shape up need to be tracked. So from that point of view, when I look at the risk return profile, I'm not that comfortable buying any specialty chemicals. One exception, of course, is PI Industries, which had a correction because one of their largest customer was going to face increased competition from Chinese, but that will be more into the future. But certainly that stock is something which has really outperformed over the last decade or so. And we'd like to remain invested in that as a measure of disclosure. But by and large, the sector as a whole, I'm not that positive, purely on account of the valuations, although they may be declaring good numbers 2-3 quarters down the line, and you could see a trading rally in them.
Okay, that's the take coming in on what to make of the move in the chemical space and how to treat them. But just looking at some of the closing rates as well, while Bandhan Bank, Bajaj Auto clearly are your big high flyers today, there's a move in the pharma pack too. Look at a Biocon today. We were just highlighting what Spark as well has done. Dipan, anything within pharma you think is a good bet? Something that one can buy at these levels?
No, not really, but it is on our radar, and with disclosure that we may invest. Mankind Pharma is an interesting company that we have on our radar. And if there's a deep correction in mid-cap stock, there is certainly one company we are going to assess more deeply and look at buying into it. We like companies which are more domestic focused, and Mankind Pharma is totally domestic focused and a very aggressive player as well. Other than that, I think one should remain overweight in pharma, and the likes of Cipla, Dr. Reddy's, Lupin, I think all of them should do well over the next 3-4 quarters. Certainly, the competitive intensity and price erosion in US generics market has subsided a little bit. So from that point of view, I think earnings for next few quarters may be pretty decent.
Pharma, that's a stock which is on the watch list, so keep it on your radars as well. But Electronic Smart India, that's seen a sudden spike. It's 11% higher as we speak. Let's pull up the intraday chart as to whether the volumes are also high on that one. 225 on Electronic Smart India. You also have a couple of these real estate names, Sobha as well as Prestige Estate, which are seeing quite a bit of spike. In fact, Naresh, it looks like for the real estate pack, every dip is getting bought into.
So one by one, names have done well. It started off with DLF, then further names. Now even Sobha, which was say a relative underperformer, lots of say concerns were there a few months back. The stock has again made a new all-time high. So structurally, it is clear that the trend is strong across the real estate pack. But the fact is, majority of these names have gone up 100% plus in the last 6 months. So at these levels, one should actually be looking
for many years. And if the if the India government comes back to power in May, then you will see a continuation of the PSU rally, especially railway stocks, considering that there's a huge modernization, upgradation, and expansion program. And all these companies are sitting on massive order book position. So there's good earnings visibility. But my overall view on the market is slightly negative. I don't want to buy into any mid caps at this point of time. So railway stocks are certainly on the radar, as I said, about some of the pharma companies. But I want a 20-30% correction in these stocks before I can find that there's some margin of safety, and these companies then turn out to be great outperformers.
So that's on the railway stocks. Time to take the BTSC ideas from our chartist. Kunal, what's on your radar?
So I'll go with the real estate stock as a buy. Godrej Properties, the stock breaking out of 2030-40 mark today. So it's a buy with 2100 as a target and stop loss at 2020. And Manappuram Finance is also inching towards a breakout of a consolidation. So buy with a target of 185, stop loss at 169.
Naresh, what's the idea that's popping up on your screen? Is it a BTST or STBT given the weakness in the market?
So both BTST, the breadth is much better than the Nifty. First is a buy on Crompton Consumer. The stock has bottomed out and showing a lot of momentum in the last two sessions. Could break out. Stop loss at 316, target price of 330. Second is a buy on Muthoot Finance, which is making a flag formation, which would break out above the 1490 mark. Stop loss is at 1465, target price of 1520.
Pull up the twin lines of Nifty as well as Bank Nifty. Those two indices have performed very differently today. You have the Nifty, which is down a good 150 points. It's threatening to break below the mark of 21,500 at the index level. If you can pull up the intraday charts of Nifty as well as Nifty Bank, and Nifty Bank is almost in the green. If I have the numbers right on my screen, it's down only 5 to 7 points, while the Nifty has been actually inching higher. So in the last few minutes, that divergence has actually expanded, and Nifty is now threatening to go below 21,500. Quickly on the charts, Kunal, is there a trade to make here?
So on the Nifty and the Bank Nifty, I would believe Bank Nifty could be something to actually go long or to carry forward the long position from here on because of the outperformance the stock the index has shown today, and more importantly with 47,600 mark, put options being a good hub for option writers. So if we expect or if we see tomorrow morning, if the Bank Nifty holds on to that 41,600 mark, that could be a very good risk reward to go long. Maybe keep a 150 max 200 point stop loss into a trade and look out for a bounce of at least 300 to 400 points.
Okay, that's the take coming in on Nifty as well as the Nifty Bank right now. But Dipan, does it seem like there could be an impending correction in the way for small and mid caps, or do you think it will largely be consolidation because there's still a lot of that FDI, FII money waiting on the sidelines?
See, the FII money is going to go into large cap stocks. So tactically, you should be overweight large cap and underweight small mid cap stocks. But the real problem is that we are sitting on a lot of profits for small mid cap companies. Those investments have generated massive returns. They are trading at rich valuations. Some of them are outstanding businesses as well. It's just that they are well overpriced at this point of time. So the real question is, just because a stock is overpriced, will you just sell it, although you know that the underlying fundamentals remain strong and could surprise you 6 months, 12 months down the line? That's a difficult question to answer. All that we can say just now is that it's best not to put fresh money in small mid-cap stocks. Incremental flows have to go into large cap stocks and try and increase the weightage of large cap stocks within the portfolio. And overall, I think if you hardly have any cash in your portfolio, then this is a good time to start building some amount of cash, at least by not investing your savings, or then trimming the positions across the board, getting out of poor quality businesses, and just waiting and watching, because there's going to be a correction. All bull markets have a correction. And who knows, in 2024, we may test the 200-day moving average, which hasn't been tested for many months. So from that point of view, I'm a bit cautious. I'm not negative on the market over the medium to long term. This bull market will last for many, many years, notwithstanding how 2024 turns out. But given the gains we are sitting on and given the valuations, I just want to be a bit careful and not over leverage or overextend myself.
That's the take coming in on the market right now. Well, be on the side of caution. If you are looking at raising some cash, then right now is the opportunity. Dipan, good to have you in the show as always. We'll let you go on that note.